Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Businessweek. That is Carol Massar. I'm Tim Stenovec. We're going to continue our conversation about Nvidia's plunge today. Nvidia erased $589 billion in value. It was the most in market history. Carol, it was the worst day going back to March of 2020 for Nvidia.
Yeah, it's pretty rough.
That's a lot of money gone.
Yeah. If you were in all in, if you were leveraged to the upside, that hurt today.
Yeah, Jensen's net worth at one point today was down about $13 billion.
Yeah, that's like, hey, honey, how was your day today? Not so good.
I think he's okay.
Yeah,
Still got that Nvidia tattoo and the leather jackets. He's cool.
I'm curious if investors were pulling money out of things, and that's what our next guest gets to.
Yeah, Evan Feagans is watching this closely. He's portfolio manager and senior equity analyst at TCW, where he co-manages the TCW Global Artificial Intelligence Strategy. Nvidia is the largest holding in the fund. Evan joins us from Los Angeles. Evan, good to have you with us. Just give us an idea of how you watch a day like this as the co-portfolio manager of this AI strategy. Do you sell? Do you buy? Do you sit on your hands? What do you do?
Yeah, absolutely. Well, thanks for having me first off. And obviously today was a tough day. And I think it really hit on, one of the bear theses of the AI trade that's really played out over the past 2 years, that all of this investment by the hyperscalers and all the capital expenditures, wasn't necessary, and there'd be a breakthrough in the way that the models were architected, and it wouldn't be as expensive to continue to see the technology to progress. But I think, I think that last part is very key. The technology needs to continue to progress. The models aren't good enough yet for so many use cases. I'm sure most people have used generative AI and seen some hallucinations, and they need to continue to get better. And I think Deepseek's model, even though it brought down prices, it didn't actually push out the capabilities frontier. So I think that's important to note. And I think that models need to continue to get better.
But pricing's a big one, right, Evan? Like I'm curious. I mean, this is your world, and Nvidia is, as Tim mentioned, largest holding in the fund. Meta's in there, Amazon, Alphabet, Microsoft. Some of these we're going to start hearing right in terms of earnings. But I mean, is there any kind of major rethink? When it comes to the news that we got over the last few days, and really it started coming out of Davos last week, where some kind of a who's who in the tech world of publicly held companies and investors are being like, yeah, we need to kind of notice what these guys are doing.
Yeah, I mean, I think it's very important, but it's also, the price for a given level of performance for an AI model, it does come down. If you think about GPT-4o mini, the price per token is down about 99% from the original GPT-4 for pretty similar performance. So once you get to a certain level, yeah, we always expected that the cost will come down pretty quickly, but we think, those savings will, they'll keep on going up and keep on pursuing performance rather than costs. We think that's still more important at this stage of the AI build out.
So today with Nvidia down more than 17%, it is a buying opportunity. Do you add to your position? That was a question, by the way. Is it a buying opportunity?
Yeah.
Do you add to your position?
Yeah,
today?
I know. I certainly think it's a buying opportunity. And I also think, it's not just the hardware players, but it's also the software players, because, the price coming down does mean that it's cheaper for people to run these models. So I think you did see some of that, but I think, that will continue. And then the ones that got punished today, there's also a buying opportunity there, because it's not just software scaling and the way that, these models are architected, but you still need the hardware side and continue to scale with computing power.
Does your strategy for the TCW Artificial Intelligence strategy change at all?
No, I don't think so. I think this is still a very long-term trend. And I think we always expected, cost for a given level of performance to come down. And I think, that's proving it out. And I actually think if you think about the AI ecosystem as a whole, I think, after, the past week or two, we actually would expect more AI to be used, say 5 years from now than we did, a month or so ago. So it's, I think it's a breakthrough that's potentially, bullish for the overall ecosystem.
Is it safe to say, though, maybe the AI darlings of today might not be the AI darlings, 4 or 5 years from now? Is it possible?
I think, in such a rapidly moving area like AI, it's always going to be product leaders and technology leaders that take it, and those absolutely do change from time to time. I do think Nvidia will be one of them. To get to your question on whether we're adding, because it's just hard to replace that for model training and really cutting edge and pushing that frontier.
Remember, Intel was once the one to beat many moons ago.
That is true. That is true.
No, but go ahead, finish your thought.
We're not seeing anything that would make us think that Nvidia is going the way of the Intel. I think they're still so clearly the leader in accelerated computing. And we just think that it really pays to be, pushing the boundary in AI right now, because there's still so much untapped potential. There's still so many use cases that have yet to be unlocked by more powerful models. So I don't think that opportunity has disappeared just because the O1 level of compute has gotten cheaper.
Pat Gelsinger of Intel, you mentioned Intel, Carol. He's out with a tweet, and look, you got to be careful with this stuff these days, because like anybody can have a blue check mark when it comes to this stuff. But this is a Twitter account that looks to be Pat Gelsinger's. He says, it's a long tweet, but I'll read some of it. Open wins. Deepseek will help reset the increasingly closed world of foundational AI model work. Thank you, Deepseek team. He says that wisdom is learning the lessons we thought we already knew. Deepseek reminds us of 3 important learnings from computing history. And that third one is the one I read. What do you think of him thanking the Deepseek team here?
Yeah, I certainly think what they've done is very interesting. They tried a few different things and how they've trained them all. They've really taken a differentiated approach. Obviously, the open source is a big one. Llama was the only major model that was also taking that approach. They did some things like changing the way the model was trained. They skipped some of the supervised fine-tuning aspects of it. So they definitely brought some innovation on the software side to it. So I think there's a lot to admire about what they've accomplished with pretty bare bones budget. But I think it really just bodes well for, again, just bringing down the price and increasing adoption of AI overall. I think it's very healthy for the ecosystem for this kind of innovation. It's really exciting.
And by the way, if I wasn't clear, Pat Gelsinger, former CEO of Intel, so.
Right, but knows a thing or two about the semi world, to say at least. Well, Evan, I think this is what we're trying to be really smart here at Bloomberg in terms of the folks we are talking to in our reporting, is kind of put it in context. This is one day. We'll see what happens tomorrow in terms of the trade. But it is certainly something that all of a sudden now the AI conversation is going to include this company. And all the CEOs on the earnings call are going to be asked about it. Again, in terms of the AI investment rethink, is there a major change in the narrative? Is there a major change in the investment play? Or you're waiting for what? If there is going to be a change. Yeah.
I think that you brought up a good point, and I do think the next week or two with some of these hyperscaler earnings reports are going to be crucial for where it goes. I think you guys mentioned just before I came on about how Meta just announced their increased CapEx guidance. It's hard to imagine that they would back off of that so soon after. We'll also hear from Amazon and Microsoft and Google. And I think they'll continue to say that they're full steam ahead on investing and pushing the envelope and unlocking new use cases. So I think it's actually pretty fortunate, the timing of when this came out for the stock market, because we'll hear from a lot of the titans in the industry very soon, right. and hopefully they'll double down on these investment plans.
All right, we're going to double down and ask you one more time. So are you going to buy Nvidia today? Have you been buying Nvidia today? Just got about 20 seconds.
We're going to buy more of these AI enablers, which includes everything that goes into the AI ecosystem, includes Nvidia and some of the other computing plays.
Yeah, because they're on sale today. I'm just going to say.
Hey,
and if you believe the fundamental long-term story, right? They're cheaper than they were on Friday or Thursday.
Absolutely.
All right, we're going to leave it there. Hey, Evan, nice to get some time with you. Really appreciate it. Evan Feagans, he is portfolio manager and senior equity analyst over at TCW. He co-manages the TCW Global Artificial Intelligence Strategy. I'm looking at it, TCW Artif.
Well, Southern California will clock a few more hours as showers continue to soak the burn-scarred landscape around Los Angeles, depending on where you are. The rain certainly, though, helping fight those wildfires that have killed at least 28 and destroyed more than 16,000 structures. They also, though, raise the risk of deadly landslide and debris flows that can overwhelm a house with mud in just seconds. A short section of the Pacific Coast Highway west of Topanga Canyon Boulevard was shut due to mudslides, and 4 vehicles had to be pulled out near Woodland Hills on Saturday. Carol, this is how it plays out in Southern California. In California, I mean, the vegetation gets destroyed by a fire, then the rains come, and the mudslides are destructive as well.
Right, there's nothing to hold, right, the dirt back, the land back.
Dr. Carolyn Kousky is Associate Vice President for Economics and Policy at the Environmental Defense Fund. It's outside of that, she's also Vice Chair of the California Climate Insurance Working Group. She joins us from Philadelphia. Carolyn, good to have you with us. The working group charged by the governor to, quote, explore innovative strategies that reduce the risk of climate-related threats. We certainly saw this play out this month in California. Carol and I have spent quite a bit of time over the last few weeks talking about the economic effect, not just on the insurance industry, but also, of course, on the way of life for many people who've been affected by these fires in Southern California. Have you been able, in your analysis, to put a number on this at this point?
I've seen several estimates of damage, and they keep getting higher. And of course, a lot of the estimates we're seeing are the direct property damage, but we know events like this cause a lot of non-property loss as well, right? Lost income and higher rents that people have to pay and so on, and it can really cascade through the economy. So these become incredibly costly.
What I'm wondering is what's the future of the insurance industry in the state of California? And I think increasingly, areas that are being impacted over and over and over again by climate change or new areas that never seem to see unpredictable weather that are now. So let's start with California. What's the future there when it comes to making sure that those that live in the state, have homes in the state, can be insured properly going forward?
Yeah, it's a very active question right now. We saw going back to the 2017 and 2018 wildfires, which until the recent blazes were the two most destructive in the state's history. And that really started a period of destabilization in the insurance market in California, where we saw lots of carriers pulling back, either not issuing new policies or not renewing policies that they already had, particularly in the highest fire risk areas. And as the private sector pulled back, we saw lots of residents of the state having to get their insurance through the state's FAIR plan, through that state program to provide insurance for those who can't find it in the private market. In response to all these shifts, the California Department of Insurance has changed some regulations and made some updates that they hoped would keep insurers in the state, but now we'll have to see how they assess fire risk coming out of these blazes.
How do you see that affecting the way that people live and work in California? This is something that Carol and I have been asking quite a bit. I'm a Californian. My parents certainly are still on the Central Coast and think about fire risk all the time. Does it cause pricing to go down because of the difficulty in getting insurance? Do people move away because they can't get sufficient coverage? Do we see a fundamental shift in the world's 5th largest economy?
Yeah, we have some initial research evidence that as insurance prices go up or insurance availability goes down, that is capitalized into housing prices. So you see declining home values, and you see people taking that into account when deciding where to live and where they want to move. The cost of insurance can be a large part of the total cost of occupancy in a house. And I think we need to focus on the fact that insurance is more expensive and harder to get when the risk is really high. And so really the only long-term strategy out of that is how do we lower our risk? And if we can lower our risk, we can not only stabilize insurance markets, but we can keep people safer and lower the economic costs of these as well. And that starts a whole bunch of conversations that are really outside insurance, right? Questions about how we build and where we build and what our communities look like. But those are the conversations that the state's now starting to have.
All right, so cue sarcasm on my part. But Carolyn, since we're doing so well on reining in temperatures and the rising temperature of Earth, it sounds like we're going to have to lean on things like different building materials, maybe building in different spots. Like, I mean, tell me how you're in the thick of it, and we have been talking about climate change now for a long time, and yet here we are, and the expectations are that things just get even hotter, and so this is our new world order. So what will be the changes? Is it really how we build? I wonder if that's really first and foremost how we move forward, and what are your expectations around that? I'm also curious about the cost equation around that, and that once again, does that become problematic for homeowners?
Yeah, those are such good points and really important questions. And absolutely, we are now locked into an environment of increasing risk. And I think it's that fact that risk is continually growing. It's not plateauing at some new level. That's really hard for us to kind of wrap our minds around and to design our institutions for as well. So 2024 was the hottest year on record, but it may well be one of the coolest that your children experience. And I think that frame can kind of help us wrap our heads around what we're seeing. And that's going to turn into more frequent and more severe disasters. And so how we can protect ourselves from them really does become paramount. And when it comes to wildfire, there's actually a range of things. So we need to think about the structure itself and making the home safe. And then also, I'm sure lots of Californians have heard lots of talk about this, the defensible space, right around the home. And then it also, because fire spreads, it's not just what you do to your home, but it's what your neighbors do and your community as well. And then if we're talking about fires that are in the forest, which is different from what we just saw right in LA, we also have to think about forest management as well. So we really have to think about risk reduction at all these different scales and align them all. And some of these things can be done really cost effectively. They can pay for themselves and lower future damages. Some are a little bit more costly, and some are just behavior changes.
We only have 30 seconds left, but I want to jump in. Do you think we see fully rebuilt in Altadena, Pacific Palisades, and other areas that have been hurt so bad?
Yeah, I mean, communities want to come back, and I think it's a difficult time to have the conversation and the tragedy of post-disaster, but an important time to think about what they want the future of their community to be and how to improve their safety in light of these growing risks.
Yeah, a lot to consider here, the way forward and how to prevent certainly the impact. If the expectations are we continue to see a warming Earth and more fires and the extreme impact of climate change on those fires, got to figure it out and how we survive better going forward. Dr. Carolyn Kousky, she's Associate VP for Economics and Policy at the Environmental Defense Fund, right here on Business Week.